Hi fellow traders, I'm making this video to share my views on Euro USD. So if we look at the Euro USD daily time frame, Euro USD has shifted to the uptrend with the with this price action. A huge candle was formed and the candle closed above this MACD predictor. If you look at this red line, so this line is MACD predictor. Price closing above this MACD predictor means the trend has shifted to the upside. And there are two ABCD patterns, and both are yet to be completed at their AB equals CD, or you can say ABCD 100%. The bigger ABCD is from this point A, B, C, and this is the 100% extension target of this one, and this is around 1280. And if we look at the smaller ABCD from this point, so this is the A, B, C, and D is almost coinciding with the D of the previous ABCD. This is 1284. So there is a difference of only 4 pips, and that's why this area 1280, 1284 is a confluence resistance zone and maybe the next destination for euro. Now question is whether price will keep going up or will be retracing slightly down and then go up. Most of the traders will agree that price will retrace down and then go up, because euro has a tendency to retrace. If we look at the previous ABCD formation, price has reacted and retraced well from 61.8% extension target. This was the A, B, C, and this D was the 61.8% extension. So price has gone above and there was a nice reaction from here. Bearish candle, slight upward retracement against the bears, and then continuation to the downside. So from this, if we look at the A, B, C, D 61.8%, there was a nice downward reaction. So there is a high probability that this time price will behave just like it behaved last time for this ABCD. If we look at the current ABCD, let me remove the 61.8% of previous ABCD. That's why. So the chart will look a little clutter free. So 1 second. All right. So now we have 61.8% level of this recent A, B, C, and D. If we look at the previous candle closed above 61.8, but there was no huge price action to the upside like this one. These two are very small candles of only few pips. If we look at the previous day reaction, though, the difference between open and close price is only from 1197 to 1217. So it was just a 20 pips. So there are two things. Either we can say that the market has already closed above 61.8% and there is no huge chance of retracement and it will continue to this area, or we can say that this was a small reaction in the holiday season, so there is still probability of market reacting from this 61.8% level and there will be a significant downward retracement. So how can we decide what we do? Definitely we have to enter long to target this. So shall we enter long here or shall we wait for the retracement? I will prefer to wait for the retracement and then enter long after I find any significant bearish candle, a bullish candle pattern on 4-hour time frame around this area, because I'm expecting a retracement to this area around 11:25, 11:30. And reason behind this expectation is very simple. I'm expecting a double repo kind of pattern on 4-hour time frame. If you have watched my previous video, I had shown you this scenario of double repo pattern on 1 hour as well as on 4-hour time frame. So market has already made many candles closed above this 3x3 moving average. 3x3 moving average means a moving average applied to close simple moving average with period 3 and offset 3, or you can say shift 3. So the price had gone up furiously, many candles above this. Minimum criteria is 7-8 candles should be closed above this moving average. So it went to the upside, closed below it, closed above it, made a new high, and again closed below it. So but there was a very mild bearish reaction, and this double repo didn't work. So market kept going to the upside, and still there is no confirmation as per 1 hour time frame, which is why we will have to go back to the 4-hour time frame. And I had explained in the last video that the conservative traders should wait for confirmation on 4-hour time frame rather than just taking 1-hour time frame. So if 1 hour didn't work, we did not lose many pips in that sell pattern, because we have a very tight SL right at the top, previous top. It was around like 15-10 pips. And now we have this formation of double repo on this 4-hour, and still it is unconfirmed. If we look at this these candles, there are many candles closed above this moving average, so it is going to be a very good double repo pattern. Price closed below it already. Now price is going to the upside. There should be a reaction to the upside price, and if price goes above and close above this moving average, and then again starts moving down, and again if it closes back below this moving average, then this double repo pattern will be confirmed, and the target of this double repo is 50% retracement against this whole move up. So 50% is this area, 1152. So this should be the minimum retracement if double repo is confirmed. Nevertheless, I'm taking 61.8% this time because of the nature of euro. If we look at the previous retracements, all retracements are bigger. Like this was a kind of 132 pips, and if I look at other retracement, this was 77 pips. This was 116, 116 pips. Therefore, I expect that the market will at least make a retracement of 77 pips. Like this was the smallest retracement. So if we count 77 from the top, it will come around this 50. Sorry, no, it's not coming to the 61.8. It's rather coming to 50%. This is the minimum target. So we can exit our sell position, and we can wait for we can exit our sell position at this Fibonacci 50% area, and then we can wait for any bullish candle formation on 4-hour time frame. I'm not considering 1-hour time frame because the candle patterns on 1-hour time frame is not working well. Market is not giving any real reaction to 1-hour candle pattern. So we should wait for reaction on this 4-hour time frame, and if we find any bullish candle pattern on 4-hour time frame around 50%, then we can enter long with the target at this 100%, 1280 area, with its stop loss below the low, which will be made after the market reaches here. So that's all about the Euro USD. If you are short-term traders, so you can just enter this. You can trade this double repo if double repo will be confirmed, and then we have to enter buy here. So that's all. There is a sell scenario for this retracement, and then there is a buy scenario for reaching to this 1280 area. Thank you for watching.